The recovery may face challenges, but our next guest sees stocks grinding higher. Chris Harvey is the head of equity strategy for Wells Fargo Securities. Chris, great to have you with us.
Great to be back.
Grind higher with what sort of leadership?
So what we think is going to happen is you're going to continue to get this less bad news type situation or story. And what's going to happen is people are going to realize that we hit the worst in the economy. We're slowly grinding back. It's not all unicorns and rainbows, and it's not a straight line up, but eventually we'll grind higher. And as that occurs, all your stay-at-home plays will probably consolidate or underperform. And what we think is going to happen is you'll have that rotation into your more economically sensitive names, and they'll begin to work. And that's exactly what we're beginning to see.
So should investors, if they had been hiding out in names like Amazon and Netflix and Facebook and Microsoft, should they be looking at industrials and some of the more cyclical names?
So the simple answer is I think yes, so. What we've been telling clients to do is we want them to pepper their portfolio with some of your deeper value names, some of your contrarian names, some of your cyclical names. These are the names where we think there are the greatest mispricings. And it's not so much that we really hate some of these Uber caps and some of these tech names, but they've had a heck of a run. We want you to take some profits, and we want you to cycle it back down into these more economically sensitive names, because this is where we think you're going to get the real price action.
Dan, you got a question?
Hey, Chris. Yeah, hey, Chris. It's Dan. How are you, bud? Hey, listen, just in the last 20 minutes, we see the headline from American Airlines cross the wires that they may lay off 25,000 workers. Last week it was United, 27,000 workers. How are you thinking about some of the scars that are going to be kind of placed on our economy going forward, despite the news in the next couple quarters that might be less bad to Q2? Are we going to be dealing with structural unemployment in 2021 that's going to be a huge damper on consumer spending going forward?
Right. So a couple things there, Dan. So one, our biggest fear is not this big sell-off in the short term. Our biggest fear is some sort of melt-up, because people are positioned for this melt-up. The other thing, we have 0% interest rates, and that's going to cause speculation and leverage to come back in. Again, our story about this less bad scenario continues to play out. And now back to your situation, what we worry about it, in that run-up, we're going to extend. And if we extend, you make the market less stable. And you're right, there are areas of the marketplace that just will not come back, that are impaired. And we do see a fair amount of speculation starting to bubble up. And so we want to stay away from it. And eventually, if we do have this melt up, this 10% run, and we're already 4% month to date, we want to start cycling back into some of your, make a tactical call and cycle back into some of your bond proxies, whether it's utilities or REITs or low volatility. But for now, we think the path of least resistance is higher, and I agree with you. There's certain parts of the market that are impaired that aren't great longer-term trades.
Chris, great to speak with you. Thank you.
Thank you.
Chris Harvey of Wells Fargo. Pete, you agree? Path of least resistance, at least for now, higher.
Yeah, I do. Well, and I was talking with Will Frost last week, and he asked me, he goes, what are the options telling you, Pete? And I said, well, first of all, we have monstrous volumes. And second of all, they've been bullish, 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 and bullish. So I'll continue to go with that path and hopefully continue to be very disciplined in how I try to trade that. But that seems to be the direction right now.